Hello guys, thank you, welcome back on my channel. I have another setup for you, and I will tell you something when I backtest it. So let's get straight into it. I am on a 15-minute chart on British pound and New Zealand dollar. As you can see on the right side, I don't have this in my watch list. I was backtesting my strategy, and yesterday and today I was backtesting it, and I saw this situation and this setup. It would be a harder setup. It wouldn't be an A plus setup. It would be like a B or a C setup, really difficult. But I want to show you how to manage it and what to look for when you want to execute with the smart money and on a footprint chart. So if you don't know, my strategy is combined SMC, the smart money, and and the order flow, the footprint chart. I will show you everything. So when I analyze the market, the chart, so I saw this huge impulsive move down, and it broke. There is a change of character, and there is another change of character, but this was really fast and big. So it went through. I thought or I would consider that there is a demand zone, but it didn't hold. It went through, right, like really fast. You can see the sharp move. So this demand zone didn't hold, and now we have a break of structure. So we would think that it will go somewhere above, somewhere like here. We pull the Fibonacci, and that it would go somewhere like in the golden zone between 50 and 62%, or somewhere around here. I will just put it because I can see I will just replay it. We have a small, or I think I would draw the supply zone like this. We have an indecision candle, and it's yes, it's here. I would think that this is a supply zone, and it would go like right here. It would do something like this, and it would break, and there will be a break of structure, but it didn't happen. So what happened is that it broke through the supply zone, and it made a change of character, another change of character. What caused the change of character? This impulsive move, and there we have a bearish candle before the impulsive move. So this is our demand zone, and we will wait. It might go to the demand zone, and yes, and it will bounce. If now I will just draw it like this. If it breaks this high, it will make a new break of structure. If it breaks, I would consider this low, it will be a change of character. So what it does next? It breaks. So change of character, nothing, and we are looking for another demand zone. I will just push this demand zone right here, and right here we have another demand zone. So we set an alert when I trade. I want to set an alert in the demand zone to the 50%, and when it goes to the 50%, so I'm looking for a trade. I don't know right now if it went. No, it didn't. You can see why I didn't do this trade, because it didn't go to the 50%. So no trade, never mind. When I price, just okay, you can see slightly it's discussable if, or we can just discuss if the alert would be triggered or it wouldn't be triggered. But when I backtested, let's say it triggered and I wanted to practice this trade. So I will just place this back. When we are on the 15-minute time frame and the alert is triggered, we are going to the 1-minute time frame. So I will just, yes, this is the candle. You can see the time 14:52. I have the footprint on my second computer, so I hope it's not a problem. But I will show you what to look for. Here on the footprint chart, there is 1 minute plus. So this was our 14:52 candle. So there it will be 14:53 candle. But I will show you. So this is our candle. I will just show it. Yes, this is our candle. It was the last bearish long wick. Last bearish and long wick. So this is our candle. We are on the footprint chart and we want to entry the trade, or we are looking for our entries. What we can see, we are bearish. You can see it. I will just, yes, you can see it that we are completely bearish. You can see it also on the chart on trading view. So this is there we have our next candle, and this was really interesting because you can see these numbers. These are like big numbers. Okay, -79, 106, -72, 657, 79, 58, 53, and these things. You can see this delta is decreasing. There are smaller and smaller numbers. Okay, there are these big numbers, but these are just pullbacks, or we can just check it. Just this, yes, this is a huge pullback. Okay, these are pullbacks. It's lower highs and lower lows. It's normal. But in here you can see 5 big five negative deltas with quite average numbers. But you have -15, -60, -66, -73. Drop to -29, and there it is. Big, huge candle with big positive delta shift. You can see -29 and plus positive 194 final delta. So this is a big confirmation to a long position. This candle triggered our 50% gun box in our demand zone, so we are looking for buys. This big delta shift, also big candle, and here you can see in this candle these 3 blue numbers, and they are above, or they are together in this software I have that if these imbalances, these blue numbers, if they are 3 and more, it draws me this green rectangle or this box. It's called stacked imbalances. It means that there is a big buying pressure. You can see that if we read it diagonally, it's 10 lots to 0 lots, 24 lots to 0 lots, 11 lots to 0 lots. Okay, so this is very good, and I would enter, because the stacked imbalances, when you see it's like support in the buy or in the long position. These stacked imbalances, it's like a support in red candles, in bearish candles. When you see like here 3, it's in a green candle, but if you have like 12, 20, and here for example 2, and it would be red, so there would be a red box, and it's and it's like a resistance. So this is only like an example. So I would enter, or I would set my entry at the imbalances or in the middle, in the 50% of the candle, or of the value area. It's this green box where most lots were traded, because you can see a lot of zeros and some lots, but there you have 20, 84, 28, 30, and these big things. So I would consider to enter from half of this candle. Also we can from half of the value area. I believe it doesn't really matter on this GBPNZD, because it's just a few pips, but in other currencies it would matter. On Euro GBP, for example, Euro and British Pound, it's these currencies are different, but it's for another video. But let's enter. I will just play it, because you can see this candle is 1456 minus 1 minute on trading view, so 1455. It's this candle. I put the GAN box and I enter from the 50% of the candle. So long position, set it to the 50%, stop loss below the low or below this zone, it doesn't matter, but just to be sure, place just some space, or below this low you can 4 pip stop loss, something like this. And where to put our take profit? We are on a 1 minute chart now, so these highs would be our first take profit. For example, here I can see that there is a small supply zone right here. It's mitigated, but like never mind this supply zone. It would be our first take profit right here, but I prefer only 15-minute time frame. I will adjust this. There is also second take profit. Yes, this we can call it resistance if you want to. There is a 15-minute, it's mitigated, but also supply zone, but I don't want to have it right here. And there is this impulsive move. Where is our supply zone? There is an imbalance from the price action, there is an imbalance. I will just print it, imbalance, did you see it? And there is, just a little bit down, okay, there is an imbalance and it wants to be filled. There is above our supply zone on the 50-minute time frame, which caused this a big move. So let's place it, and we have our supply zone. If you want, I place the GAN box 50%, and it's up to you if you want to go to the 50% or 1 or 0 or whatever. So we have 3 take profits, first on 1 minute, 15 minute and a higher 15 minute. So I will just put it in the 50% and I will drag it like this. We are on the 1 minute. I will push it with, yes, on the right of the candle, and now the entry. I won't play the price fast, just to see the entry and if it hits our stop loss or what it does. So nice, didn't hit on the 1 minute time frame. Change of character, nice. What else? Yes, we have a break of structure right here. Okay, maybe just like this, small break of structure. Okay, so now I will play it. I'll zoom out. I play the price, yes. Why the price went here? I don't really know. It's just price. I don't know. I wouldn't. Maybe it wanted to retest after this change of character. Maybe this zone, this demand zone. You can see that there is a bearish candle, and it went here to the 50%. So maybe if you, or when I didn't knew the footprint, I entered after the choke from the supply or demand zone. So I would place a long position, set it to the 50%, stop loss below the low, or below this zone, below the low. It really depends, and take profits to the zone, to the supply zone. But now it doesn't matter, so I just play it now. Yes. So first take profit hit, second take profit hit. Sorry. Yes, nice. I go to the 5 minute, that it will be more exciting, and I play it. Third take profit also hit. So this is it. Nice, 30%. Here you can see a risk to reward ratio 30.6, almost 31, but to be more realistic, 30% risk to reward, 4 pips stop loss. So if you risk 1% of your equity or your capital, you make 30%. So if you are in a FTMO challenge, or you want to be funded in this trade, and you do, for example, FTMO, so you would pass 3 times in one single trade, and it took 7, it was take you 7.5 hours, almost 8 hours. So so that's it. And as you can see, if we are going on the 15-minute time frame, there is another break of structure. So if you wouldn't like to hold it and you would like just to scalp this trade, you can exit, for example, here, or you can take partials here, and you would have a nice 17%, which is also nice. So we would have a lot of room just to risk, but you would achieve the FTNO challenge. So this is it. I will just repeat it. I wouldn't take this trade because firstly it's not in my watch list. You can see it that I don't have the British pound and New Zealand dollar. It's more difficult. Secondly, it's more difficult because I usually want to see this exhaustion print that it tells me that in this case the last seller has sold, and I need this confluence. In the best scenario, I need also the zero print. It's like a bonus, but it's better to have it. So I wouldn't take this trade. Maybe I would take this trade from here because there is the exhaustion print. You can see it's 15.07, and if I just play it back, so 15.07, it's this candle minus 1 minute, 15.06, and you can see even from the 50%, if I would place the stop loss below, I would be stopped out. If I put the stop loss below this low at the 50% of the demand zone, so it would be 3% free RR, and if I just for this here, it's 9.45. It's almost 10%, which is okay. It's okay, but for me it's a really big stop loss, and I don't like big stop losses. I really want aggressively, and I want to aggressively enter, and just that it smash my take profit, and I enjoy this style. I don't want 20 pips stop losses and these things. I really like 2 pip, 4, 5 maximum pip stop losses, but it depends on the currencies. So this is it. So thank you for watching, and if you have some questions, write me in the comments, and I will respond you and answer. So thank you for watching, and have a nice day, and see you at the next trade, next setup. So thank you and bye bye.